The loan activities of bank. What banks work, they take the extra money of the people, that is the people, they deposit their extra finances, extra money to the bank, and those who need, they take that money in form of loan. So let us see the working of bank, how it helps the borrowers by providing loans, and how it helps the depositors by keeping their money safe, also providing them something so as better rate of interest, some amount, extra amount for which they are keeping their money. This is a sort of attraction from the side of bank that they will provide some extra money, so called interest on the amount which has been deposited by the depositor. Now let us go into the depth how these banks they work. We know, we have talked earlier in discussion of demand deposits, or you say deposits with the banks, means the people keep a little amount with them for day-to-day tasks, and the rest of the money, whatever was their income, what was their wage or salary, the required money in the month or for a few days, they keep with themselves, and rest of the money they deposit in bank. If need be, they take it back in form of demand deposits, or even if they have to pay it to someone, they may pay it through checks, means without the transaction. What we studied in transaction of money was that maybe for their own requirement, any individual may get back the money on one's own demand from the amount deposited in the bank for their own usage, or if the payment was to be given to someone else, that could be given in form of checks, that is the stated amount, the filled amount in the check will be deducted from the account of the owner. Means if I have to pay some money to you, so from my account the money will be deducted and it will go into your account through check. So I will be safe, I won't have to carry money, you too will be safe. After getting it from me, you won't take it back, and the transaction will be done. You will be satisfied because in your account the amount has been deposited. Now this all functioning how bank it does. Children, those people who make deposits, they are termed as depositors. They, after the amount required for them, they keep with themselves, and rest people they make deposits in bank so as the money would be safe. Okay, now the bank keeps on getting money from various individuals, and this becomes a huge amount with the bank. This bank now is having a huge amount after so many depositors, they have kept their smaller amount. Now bank, what it is going to do with this money? Because if any individual wants back money after a year or a two, or for the you say for 5 years the submission has been done, bank can utilize this money further by giving it to those who need money, who need loans. They are called borrowers. Now bank keeps the money with itself, and a major amount of the same will be given to those people who take loans. Correct? Now how much money, what percentage of money of the total amount deposited in the bank would be kept by it? It would be almost 85% that they will give further in loan. And because not everybody is going to come back to bank to ask for their money to be given back. Say today I deposited money, and after a few days, after a couple of days, I am moving to bank because I need it urgently. I met an accident. I had to go for some other household urgent task, and I need my money back. I will ask it to the bank. So you say for on an average basis, out of 100 depositors, maximum 15 depositors would turn back. It is taken on probability basis. You remember probability in maths, and a number of ways, the number of examples you have been explained about it. For just a revision from my side, because it's maths, better taken by your teachers. If we just throw a coin, we get either head or tail. So 50% chances are of head and 50% are chances of tail. So probability of heads is 50%, probability of tail side is 50%. Similarly, going with probability, banks, they keep 15% of the deposited amount with them, and rest 85 they further pass it on in form of loans to the borrowers. This way the banks, they get the money deposited and they give it to the borrowers in form of loans. Now next, what is done? Once the people, they take loans, they are to repay it, and this repayment is done with interest. Now what is this interest? The extra money which bank is going to charge from them as a sort of additional to loan. Because why would anybody give something to anyone else unless and until one is being given something extra in back? If banks, they do give money, they keep the records and they decide the terms of repayment. If they are giving money, so definitely they want some interest over that, and they charge a bit higher rate of interest as compared to those what they pay to the depositors. Now say on 100 rupees, if they are charging 10 rupees as interest, so the borrowers who have taken rupees 100 will be paying back 110. Out of this 10 rupees charged from the borrower, bank may keep 5%, that 5 rupees, that is 50% of the rate of interest would be kept as the income of bank, and rest 5 rupees will be given to the depositors. So the one who has deposited rupees 100 is coming back after a short span of time, or whatever the tenure that has been decided by the banks to keep the money. They will be back and they will be given rupees 105. This 5 rupee is that interest which they will be getting at the time of withdrawal of their original amount. That amount which they have kept for safety and for the rate of interest as well, that it is also their one of the earning. This way, the bank, they keep the activities of loan. This is the major question which may be asked in your board exam, asking for explain the loan activities of bank, or in very short questions they may ask to define who are depositors, who are the borrowers, what percentage of amount is kept with banks. So that is 15%. Children, this is also given a name that is cash reserve ratio, CRR. This is CRR, cash reserve ratio, means the cash which is kept in banks in reserve form to repay those individuals who come back in between. So that 15% is the CRR. Sometimes it keep changing. Sometime it may change. That bank may keep more than 15% also, and even less than that. If banks pass, what would happen if the banks they pass on the whole amount to the loan takers, to the person who come to borrow, and the other day people, depositors, they come back to ask for their money. Bank says, no, sorry, we cannot give it back to you because it has been further being given in form of loan. Once you deposited it for a year, come after a year. No, it cannot happen, my child, because they have their repo. This decreases if they deny to repay to the depositors. This harms their dignity, and for this they have to be ready to repay the amount to the depositors. So the question may be, working of bank, who are the depositors, who are the borrowers, what amount is kept with the bank as CRR, what is CRR, what are demand deposit, we have talked earlier, what are checks, and simply it is, what is the working of bank.